Let's talk about the importance of getting a experienced, good lender on your side from the get-go.
Yes, let's.
Well, because we have a lot of clients who always tell us, oh, we're just shopping around right now. We just want to see these couple of houses and get a feel from it,
right.
But we don't want to run the numbers.
Or we're not going to be ready for a while. We're just trying to get estimates. We hear it a lot. And while understanding of that, a lot of people also say, oh, I don't want to pull my credit or whatever the case. But that stuff all lasts 6 months. If we're out searching when you're more than 6 months out, we're probably way ahead of the gun anyway. But yeah, it's the matter of fact, most important, number one, first step before we do much of anything. It's not just so that you know what you think you can qualify for, but what a good quality lender knows you'll be able to close on.
And I'm going to interrupt you there, because when you say a good quality lender experience, also have had experience with clients who just go online and try to apply because they got an ad, probably because they've been searching for homes and they got an ad about this lender who is offering you these great deals. You just have to apply here. And while they just grab your information and run some numbers based on those numbers and know your profile,
right.
And they spit out a number that you qualify for, that's not what we're talking about when you're getting pre-approved from a lender or even pre-qualified from a lender. And normally those companies are tech companies, and they from Oregon or from Seattle or from other places that they don't know much about the regulations of the state of Texas and how to close a home here.
Right. And besides those very valid facts, when it does come down to making offers, especially if it's in any kind of a competitive market, or you've got a home that's going to be desirable, having not just a fully approved loan that we can show to this agent and seller, hey, we're ready to roll here, but a local one that is reputable. It may not be by that specific agent, it might be, but if they know that they're local and they have a reputation for that, it's going to give us a much better advantage than, not to knock any specific bank, but some large bank where I'm going to call in to verify this, and I'm going to get some guy that has to look up the file to see who you're even talking about, as opposed to me calling John or Max or whomever, or Tommy, who, they're going to talk to that person. And that person has already looked over their file. They've run all of the background checks. They've checked their pay stubs. They've checked everything that needs to be done up front. And so we know the only thing pending about this whole deal is the property itself.
And a couple of disclaimers I want to add here. First, when we refer you to a lender, we don't get any money from a lender. Right. The only thing that we get is the peace of mind that you are in experienced, good hands, and that we're going to close this deal.
Exactly.
And we are not lenders, but we know how important a lender the lender is for this process. I mean, it's like almost you go into surgery, you need your surgeon and you need your anesthesiology. And if one of the two are not experienced and know what are they doing, the surgery can go wrong, can go really south.
Yes, it can.
So make sure you have those two pieces. And normally people come to a realtor first, and that's why we send those referrals. And sometimes I feel that we push for these lenders, but not because they're our friends or because we get any referral fees, only because we know their experience and they're gonna get you through the finish line. Nothing against the big banks. Big banks are good to have to have your accounts and your money invested in there, but their home loans or mortgages are not the bread and butter.
Yeah.
So they're limited to programs that they can only offer.
Or they may think they are, but
yes.
We know better. And again, like we talked about before, they might be offering a certain deal, or because you're banking there or something like that. Often those don't end up working out very well. And the bigger part of it is that they're very stringent. They're very black and white on things, and they don't have any other options. You fit this box or you don't. A lender not only can shop around to different ones, and it might even end up being one of those banks, but they have the ability to shop around, and they also have the ability to work with certain lenders or banks and such that don't have such a black and white line between criteria that you may be needing to qualify for the loan. So not just knowing, okay, yes, we know you're approved for this, but it's good to know up front, how much are you going to need to put down? What is that money, and do you have it ready and available? What is your monthly payment going to be? Are you comfortable with that? Does that work for you? We find out all this information up front, so we know exactly not only what you're qualified for, but what you're most comfortable with. And, sometimes it's going to be less. Sometimes you're really comfortable going way above, but unfortunately, for one reason or another, maybe it's the way you do your taxes, whatever the case, you may not actually qualify. In other cases, you may qualify for a lot more than you're really willing to pay each month. Those can be great situations, but we need to know that so we can plan it. And a lot of times when that's the case, we'll plan a little bit lower. We'll say, hey, well, let's start you in this price point. It's real comfortable for you. Let's see what we can find. And if we're having troubles and we're saying, these aren't quite right, we have a little bit of room to maybe start bumping up a little bit from there. It's a nice feeling to be able to go in with knowing all that information. And again, that when we do find that right home, because it might be the first day, it's not uncommon that we get out there and somebody hits that property. Some of them are nervous about it. Some of them know right away, but it's that first day like, oh my God, should I be doing this? But when it hits, whether it's that day or whenever, if we're not fully ready with a fully approved loan, we can lose it easily. If not then, right away, by the end of the deal, and that can be even worse.
Yeah, and it's always better to start that way. You start with a lower price point and increase it as we go versus the let's start looking for 700,000 homes. And then when you actually apply and qualify, it turns out you only qualify for 500. So it is very hard to come down to that, because you got used to what you in your mind can get.
Almost impossible. It's really, really tough. We've seen it. Even if you haven't gone to actually look at the home yet, we've been sending properties out. Here's what you said you had an approval for. For some reason we didn't follow through with getting that pre-approval, and we're sending you properties, and then we find out, whatever it is, we were sending you $1 million properties, and you're only going to qualify for 900,000. It's devastating to have to. You might have been having a tough time finding just the right home at $1 million already, and now you got to limit it down to 900, which means we probably have to move further from where you want to be, get a smaller home, whatever the case. It's just a tough pill to swallow, as opposed to coming in right from the get-go and knowing what we're going to be able to do and setting that plan right from the beginning.
And having that monthly already in your mind. And that monthly might represent more than just principal of interest. Might have to talk to the lender about the areas that you're looking at, and they need to calculate the taxes that might be included. Some of those homes might be with an HOA. If you are thinking about buying a condominium, normally those HOAs are pricey, so you need to take that into account. So there are other fees that not only the principal of interest that you have to talk about it with your lender.
Right. And a lot of these, of course, trigger a lot for us, having recently experienced this with a deal, and it happened to be a condo. And condos, they're a different breed. They have their own market. They have their own qualification needs, and they have to be warrantable. And there's a whole list of things that can come up with a condo that don't necessarily come up with single family homes. And so having a lender that not only is aware of that, but understands it all really well is crucial. So if you're in the market where a condo may be an option, you might be looking at single families, but condos to get you maybe closer in or a little bit more of what you want can be a good option, but they do come with the HOA. So we have to factor that into the approval amount. And we have to make sure that they're warrantable and that the lender has the flexibility to be able to look at that loan and make their own judgments on these things versus, again, not to harp on all these big banks, but they tend to be very black and white. They get these things, they look at the Fannie Mae and the Freddie Mac guidelines, and is it check yes or check no? If it's questionable at all, we can't do this deal. And a lot of times, even no matter how strongly, sometimes even when you're pre-approved up front, but the product part of it comes into play, the condo itself comes into play, and they get that and they say no, and we are weeks from supposed to be closing on this home, and they kill the whole deal.
And the problem is that they come back and say, you are not approved. And then buyers feel like they are not approved. They don't realize that is the bank not be able to approve the condo complex, and that they might be approved to buy something else, but not that specific on the project. So.
Right. And, again, not to be too specific on this most recent, it's just fresh with us, but they had this great incentive being offered to them through this local bank, or not local, but their branch that they had worked with before. And they were getting like $10,000 incentive from the lender itself because of the program, because of the area that he was in. And it was seemingly great, but we kept trying to tell them, okay, but you should consider this. You're already providing all this information to this one. Let's provide it to this lender over here as well, just in case. And in our case, we had some buyers who were very specific. They felt very confident. They'd worked with this lender before, and they wanted to stick with it. And that did end up backfiring on us. Luckily, we were able to get a lender who pulled it off within about a week, miraculously. But we nearly lost that entire deal, and a month or more of time and a lot of frustration by the buyers. It would have been really tough to come back from, just because they wouldn't kind of take that advice. And so, like we talked about earlier, we don't get anything from it. It's just, we want to make sure that this deal is going to close. So a lot of times we get people who come in and they might say something, hey, I'm already pre-approved with Chase or Bank of America or some other bank or something. We say, that's great. And hopefully that will work. What I'd love for you to do is run this by one of our preferred lenders, mostly because we know them and we trust them. If they tell me that this deal is good, fantastic. You end up closing with whatever bank, any lender you want. That's great. I just want to make sure this deal closes. And if they put up and they say, hey, I'm looking at this, because they might be looking at it with a better eye and more detail, this could be an issue here, and your lender's not saying anything, that's a big red flag to us. And we want to make sure that we're aware, or that we at least have them on the side here, that they can come in and hopefully save the day if something goes wrong.
And as a consumer, you always want to also shop around, see a couple of options in the beginning. And if you already qualify with somebody and your realtor recommends somebody else, just try it out just to see what they are and to learn more about the process, because one lender gives you the faith estimate of how it's going to look, and another one, they look totally different. The same example that you were talking about, the incentive for the first-time home buyer in a bank, once you really translate it, because there are also points included, and they were like, it turned out it wasn't like the amount of money that they were promising, because they were charging extra points. So, but it was some incentive in there. But then when you compare it with somebody else, they might not have points, but they might not have incentives. So you really need to sit down and compare apples to apples to really see, okay, this one is giving me a better deal than the other one. And there's nothing wrong with shopping around. It is a tedious process. They will ask you for the same amount of documents. So we always recommend to create a file, put all your tax returns, put all your pay stubs, so your bank statements, and just create your financial file. And then you chop it around with two, max three, because it really is no more needed. But at the same time, once you go through the process, you have those back plans. You have somebody else in the back burner.
Yes, and it does depend as well on everybody, on every buyer and every situation. To me, as long as you've got one with somebody that we can trust, that we know for sure, wherever you end up going, I feel pretty confident that this is very good, and we have the right price range, and we have the right money you'll need down, and the monthly payment, all that kind of stuff. That to me is enough to say, okay, let's start looking. We've got something. Now, once we get to the point where you are contracting on something, and you want to make sure that, hey, I'm glad he's there. I know he can close me, but can somebody else offer me something better? Maybe. Now we can say, okay, here's the good faith estimate from this lender that we know and trust. Let's throw it out to this one and this one too, and see if there might be a better deal. But even when you do that, it's very important to understand, one, you need to do that pretty quickly at the beginning, because we have the process that's going to take us roughly a month usually to get done. The biggest hurdle being the appraisal. So we need to make sure that we have time, because the appraisal is tied to specific lenders most of the time. They won't take an appraisal from somebody else. But also you want to make sure you're, like you said, it's not just apples to apples we want to compare, because a lot of people will just look at the rate and say, oh, this rate's better, I'm going with this. But if you break it down and you really see what's going on there, it is way more than that. And so it's just important to make sure that we understand exactly what you're looking at and look at all the line items so that you know what you're getting and what you're paying for it.
And same with the new construction lenders, because right now we're seeing that the new construction lenders are offering amazing rates, and people only focus on the rate. So, and they do. They actually have seen a couple of new construction that is really hard to beat with a regular lender. But sometimes you can beat it or be close enough. So just to pay attention on the fine print of those faith estimates.
And that's another one. So most of the time, we still want you to go out and get a pre-approval. We want to know that lender. We want to know you're fully approved, not only to have it, but so that we're all on the same page, right? What you're going to need. But if you're shopping largely for new homes, odds are you're going to end up using that lender. You're never required to, but they offer so many incentives to do so that it's hard not to. And if it's something that lender, that builder's lender can end up doing, now we've got that backup, because now they'll usually still give you those incentives and let you go and use your own lender. And if they can get it closed, you're probably going to be using that lender. But that's okay. The lenders that we work with, they understand that. They know that. Nobody, of course, loves it, but they get it. It's not going to be an issue. It's more important that we go into this with our safety net and are doing this process correctly from the get-go and not end up needing to use them after all, than it is to get hit with that dreaded last-minute loss.
Yeah.
I will say one other thing is that when we're going out, a lot of buyers don't think about it, but from our perspective, we're out kind of in the trenches, if you will, competing to get you not only sometimes winning a property to get your offer accepted, but maybe if we're competing with somebody else, we've got to really shine here. And so when we come in and we can talk about our local lender, this person that we work with all the time, they probably know who they are. We can share the information. We can tell them everything about it. We are prepared. It's going to make us shine. And because at the end of the day, as experienced agents, when I get offers from people, if I get one that's from some local person that I know, and I'm like, yeah, this person always closes these deals, and I get one that's from some bank in Oregon, as you say, or something like that, apples to apples, I'm taking the local one every single time, because a dead deal does me nothing. I don't want to risk losing a deal and losing this other buyer. I'm going to take the one that I know is going to close, sometimes even at the cost of a little extra money. I mean, we're going to discuss that with our seller, of course. It's their decision. But, we're going to make sure that everybody knows exactly what we're dealing with these two loans and who's more prepared and who's more likely to actually close.
So bottom line, make sure you have a good experienced lender on your side in the buying process. And give us a call if you need help finding one or if you want to know more about the buying process.
Yeah.